On today's episode of Tax Insights, Jeff discusses key considerations for early retirement account withdrawals. He explains potential penalties and the new 2024 exceptions that could help you avoid them. Tune in to learn how these changes might impact your retirement planning and the steps you can take to stay compliant.
Today, we're going to be talking about retirement planning, but more specifically, if someone wants to take out money early from their retirement account, give us the pros, the cons, the do's and the don'ts, shall we say?
Yeah, because we've talked a lot in the past about putting money into retirement plans. And I think that's critically important, because when you retire, the income stream goes away. And so that retirement money is important to last you for the rest of your life. But there is going to be situations where maybe you have to take some of that out early. And if you take it out before age 59 and a half, generally you have to pay both income tax and a 10% penalty for federal, along with any kind of penalties for state.
Okay, so basically listeners should be aware of that if they are going to take money out, because there are those penalty fees.
There is. And what the IRS has done, though, is they've done some exceptions to that 10% penalty. So if you take money out for certain reasons, you still have to pay the income tax, but you don't have to do the 10% penalty.
So what are some of those exceptions, shall we say?
There's been a number that have been out there forever, birth of a child, disability, education, things like that. But there's two new ones that just started here in 2024. And one has to do with like domestic abuse victims, and the other one has to do with just an emergency that comes up in your life.
Okay, so those are the reasons where you would not have to pay that 10% is what you're saying?
That's right. Yeah. So let's maybe talk about that domestic abuse victims.
Yes.
So there's a distribution that a person can take out up to $10,000 or 50% of their account balance and not have to pay the 50% penalty. So as we know, when somebody's leaving a bad situation, sometimes, you need that cash to get you through to that next step. And this definitely helps you out with that.
Okay. So is this something that then they qualify themselves for? I mean, like how do they know if this is something that actually is going to qualify for that?
Yeah, it is really more of a self-qualification.
Gotcha.
But as long as you can do that and you file your tax return and ask for the exception, the 10% penalty will not apply.
Now, let's go on the opposite end here, Jeff. There is an age where they have to start taking money out, correct?
There is. Yeah, and so it used to be 70 and a half, and now it's 73, and it's a little different type of a scale right now, depending on how old you are. But yeah, there is also a time that you absolutely have to take money out. But there's one more exception I want to talk about, Terry, and that is that emergency personal expenses, and that's brand new. Now, it's only $1,000, but basically you could take $1,000 out for any reason. The IRS really says this is very wide open. Now, you can only do it once every 3 years.
Okay.
But if something happens, the car breaks down, the furnace goes, something like that, you can take $1,000 out of your retirement account. You have to pay the income tax, like I said, but not the 10% penalty.
Okay. And you don't have to put that $1,000 back into that account at some point, right? Like that is simply, you can take it out and keep it.
That's right. And if you wanted to, though, you actually could put it back in within 3 years. So if you did that, if you decided you need $1,000 today and you paid it back in, let's say, 6 months from now, you could then have that $1,000 to take out at some point in the future.
Okay. Jeff, a lot of great information here on the program. If listeners need to connect with you over at Hawkins Ash, what's the best way of reaching out to the team?
I would visit the hawkinsash.cpa's CPAHQ section, because right there we have practical resources, expert insights, and you can connect with us on social media for more financial tips.